Hello and welcome to another episode of FinTech Focus TV with me, Toby Babb. Today we are travelling over to Copenhagen and delighted to introduce you to Christian Kromann of SimCorp. Christian, how are you?
I'm very good, Tony. As you can almost see, the sun is up here in Copenhagen. That's not every day these days, so it's great. And also this morning, that was the first time in 2 years that I had there was traffic on the way. So somehow the world is coming back to normal.
We are slowly getting back to normal, and it starts with sunshine, doesn't it? So that's good to hear. Listen, SimCorp itself may to many people not need too much introduction. It's a business that I've known for a long time and a stunning reputation. But before we get into that, give us a little bit of background about yourself, Christian, and tell us a little bit about SimCorp.
Yeah, will do. So let's start with myself. So I joined the company a couple of years ago and stepped up as CEO in September last year, actually at the day that marked our 50-year anniversary. And that also gives
congratulations.
Thank you very much. So that's truly exciting. I'm a fintech nerd, so that's all I ever done in my life. Did a bit of insurtech before I joined SimCorp, and before that, quite many years with SunGard that has certainly also been firmly in the fintech space. So that's what I love, understanding customers.
You're in the right show.
Yeah, exactly. Understanding customers' requirements on the sell side is where I spend a lot of time, and now obviously firmly on the buy side, which is really the focus area for SimCorp. Quickly on SimCorp, as I just said, now a bit more than 50 years, a little older than I am. Has always been very focused also on the buy side, actually starting out many years ago with an idea of doing sophisticated liquidity budgeting. And that kind of morphed into understanding that there was a repeatable set of requirements that obviously suited well to build technology to underpin that, and then worked through many years and has especially the last 10 years accelerated from being somewhat a regional player to now a fully global player with kind of 300 customers in the upper end of the buy side market, ultimately delivering kind of a full front to back support for the investment process at basically any investment manager kind of above kind of 10-15 billion.
It is more or less any investment manager as well, isn't it, in the world that you guys have been dealing with?
And one of the exciting things that has happened the last couple of years is that we're quite fortunate to have partners in the global asset servicing world that is also taking the platform as an embedded into their platform and thereby extending our reach. So it's exciting. It's very exciting.
It certainly is, and over 50 years. I mean, look, it's one of the most established, fintech companies that there is. And over that 50 years, I don't think we've probably seen as a rate of innovation in the space as we've seen over the last two. That includes probably over the last 10 years, the landscape changing completely in terms of enterprise software, giants in the space dominating the area to a whole host of new incumbents that are coming through, and indeed, the institutions themselves who've been bringing in their own tech and buying and acquiring companies in the space. Tell us a little bit about the landscape and how you see it at the moment.
So I think, as you rightly say, so being 50 years old doesn't necessarily secure any level of innovation. That's at least what my kids are telling me. So I think all the companies, especially in the tech world, right? So we actually, I think what the 50 years has given us is really a solid place in the market, right? We're known, we're delivering mission critical support for our customers, and every day we kind of instill trust, but that's also something that we need to continue to earn. And it's certainly fair to say that the world has moved on at a relatively high pace, and some of these things have been amplified by the COVID situation the last couple of years. So what we spend most of our time on is obviously to make sure we still have kind of the rich functionality that is required for our customers to deliver their business. And that has certainly extended with first alternatives, now ESG, and the full support required to do all of these things. So we continue to evolve the overall platform. We also done a couple of additional acquisitions over the years. One was for client reporting that certainly became very fashionable during COVID, and the second one on kind of adding data management to the overall value proposition. So I think we are extending what we would say, extending the core as a company, but we also kind of sat back and said, all right, we have this position in the market. We are at least among the biggest independent players in this space where we provide technology. That's all we do. We do compete with financial institutions that also provide technology, and somehow they are both competitors and also partners. So it becomes an interesting ecosystem. But at the very least, if we kind of sum up what we spend our time on is, first and foremost, we are gradually moving from a traditional software company where our customers would traditionally consume our software on premise to now that they predominantly consume it as a service. And that's certainly driving all of new customers, but it's also now really accelerated to drive a lot of transformation out of our existing customers. And that kind of changes a lot of things. It changes the culture inside the company. Suddenly, you need to have a kind of a 24/7, always on mentality. You need to drive customer success in a completely different magnitude. And you ultimately need to upgrade your skill set, both in terms of your cloud capabilities, but also the way you work. And that's really what we're spending our time on. That has a couple of positive side effects that I would say has driven a lot of conversations over the last couple of years. So we now have 50 out of 300 customers that we're running as a service. So we already created some level of scale, which is great. We also decided to build a strategic relationship with Azure. So we're now kind of putting a lot of money into that. But what's kind of really exciting for us as a company is two things. The first thing is by moving the software to cloud, that allowed us to redefine the way we do APIs. And with a lot of existing customers, once you have kind of the full front to back value proposition, you obviously need a lot of data interaction to that part of the platform. And ultimately getting that done also drove a substantial innovation in terms of how we work with the outside world. So as we're moving our customers towards a software as a service model, we also decided to put a lot of investment into the underlying technology to get kind of full value out of that. And that had a couple of really positive impacts. So first and foremost, renewing the APIs gives a lot of kind of benefits to our existing customer base. As you can imagine, once they have the full front to back platform, the IBOR, the ABOR, they need a lot of data extracts out of that. So just simplifying that has a benefit to every single customer, actually regarding whether they're software service or on-prem. But the really kind of interesting thing for us as a company was the fact that that allowed us to start to work in a much more structured way with the outside world. Because ultimately what we do have is that we have customers that needs kind of a full spectrum of things in order to run their business. And then we have our definition of where we sit in the front to back space with client reporting and data management. But our customers need more than that. So we engaged into a conversation with customers and say, all right, what do you actually need in terms of running your business? And we did that across all 300 customers. And then you find some level of repeatability, but you also find things that are somewhat unique. The interesting things is once you start repeatability, actually SimCorp can play a more strategic role in that space by working with those other technology providers to create an ecosystem that in the end helps our customer navigate through their challenges. So we actually started out by building a lot of really strong relationships on the outside of what we do, under the mindset of an optionality play, to give our customers the choice. And that goes all the way from choosing an EMS or potentially choosing a portfolio optimization capability, but actually all the way through working the way they work with custodians and asset services. So we build integration all the way around, we maintain it. And in the end, that obviously gives a commercial value, both for the customer, but also for SimCorp. And that's super cool because it also drives our culture in a completely different way.
I think it's really interesting because you're right. It does drive culture in a completely different way, and it sounds to me from what you've just said there, there's a lot of learning that's had to happen at quite quick scale from a traditional business, and you see a lot of enterprise businesses who've been around for that sort of time who continue to sort of say, look, this is what we do, this is how we do it, and they have an arrogance around, you know, their ability to, you know, or their desire not to change. This is what our customers want. I love what you just talked about there.
I can tell you that if you have a company where you have 50 years on the back, there's a lot of people from a cultural point of view that are used to that everything is done here.
Yeah,
right?
and this is yeah.
And if you can do both, you actually create some strength, and you also basically get a better customer experience.
And that customer piece that you talked about there, you know, 300 clients and listening to what they were talking about, that also takes some, you know, some planning, that takes some execution, that takes you know, a lot of it's not just like you go out there and immediately react to what they're saying, but I imagine it's about clusters of similar sort of thought processes that went around there. What drove, you know, was that a COVID thing again that said we need to get closer to our customers, or was that just evolution, or what drove that? I think
it was actually when we started to say that the expectation is that at some point all customers will consume as a service. We started to realize that consumption is driven in the end by understanding the customer and help them consume, if you will.
Yeah.
And that means that you can't rely anymore that they call you when they need you. You need to ultimately drive a completely different strategic dialogue in basically to get through that. So we actually identified that close to 2.5 years ago. And what we did there was we separated the people that work with getting new customers through the door from the people that are working with existing customers, because it's a different type of dialogue.
Yeah.
It took a while to kind of get the customers used to the fact that we were actually there to talk adoption and not just to sell them another license. But I think now it's really turned and it's becoming a really strategic dialogue. And the really cool thing is it's a fantastic set of data to also feed into our technology roadmaps, because suddenly you can start to see what is repeatable and what is not.
And you say that there's, you know, that technology roadmap's interesting as well, because you say there's been some serious change in terms of how you've looked at things from the evidence of what you found from your customers, and
yes.
You know, as a service now 50. Yeah.
ESG is a very good example of that.
Yeah.
That has really, really accelerated the last couple of years. First and foremost, because there was change in regulation, but also because people can now see that that's driving growth, right? We're quite fortunate because a lot of our customers from way back that we still are fortunate to have was the Northern European, in particular Nordic customers, and they have been on the forefront of ESG.
Yeah.
So there we could actually tap into that quite easily. Alternatives is another good example of things that has taken a real turn, obviously in a low yield environment. Let's see how long it lasts.
Yeah.
It was required to kind of think outside of the box and what are the investment vehicles that you're using. So that's another thing that has been.
There's been a lot driving that, hasn't there? Sort of both on a macro basis and in terms of, you know, market trends and definition, through to, you know, even new asset classes, you know, coming in, you know, around crypto as for example.
Crypto is another thing that's potentially a little bit easier to deal with from our point of view, because it's you know, it's another currency, if you will. But there's certainly a lot of settlement discussions and other things that we also build partnerships to make sure we help the customers with.
I'm interested in that sort of, you know, as you say, the partnership. One of the things that we've seen a lot over the last couple of years is that there is an end user sort of desire to have something there that is bespoke to them, which isn't just like this is how it works and this is the technology from one vendor who you've got to look at. This is looking at numerous different you know, ways to increase efficiency, reduce speed, or increase speed. Sorry, should I say? Remove friction, and all of these different things is about bringing a collective, and I think this is particularly prevalent on the buy side, where we probably haven't seen the innovation. I remember 7-8 years ago sitting on a panel with CTOs in the buy side space, and they were eagerly looking for more innovation in the area. I think they've certainly had their wish granted on that over the last couple of years, where we've seen more and more coming through. Which has been really interesting. So talk to me about how you work with that, how you work with your customers to get the right partners to come in play, how it's become a lot more of a collaborative, interoperative field that we live in. What's that driven for you guys?
I think the easy answer is that this is something people actually like to talk about. So there's kind of I think there's two trends to think about. So there's one, as you start to consume more and more software as a service. The old school traditional upgrade, kind of taking half a year or whatever, slowly goes away, right?
Yeah.
And that means that your main task in the end becomes the integration testing that you need to do between your different solutions.
Yeah.
And there, no matter whether you are getting the individual service delivered, you will still have integration challenges between them, right? So people, that becomes the main focus. How do I make my own ecosystem work? And how can I tap into the ecosystem of potentially SimCorp in this case? So that kind of was clearly driving that. And I would say there's probably one other thing that, that kind of speaks to another thing that we're spending quite a lot of time on, is that through that process, we see a clear trend that customers are starting to say, all right, do I actually need to do this particular piece of work myself? Or can I ask somebody to do it? And if you go some years back, the only alternative there was to outsource in the traditional way. And you could do that either by asking a large consulting firm to just take whatever stuff you had and run it in whatever shape or form cheaper. Or you could ask an asset service or a custodian to take some of that work away. I think there's now, we're seeing the embryo of a variation of that, which is what we just launched with the investment accounting service, for example, where we actually out-tasking investment accounting for our customers. So they don't run the software anymore. We are ultimately delivering the end result to them in a data warehouse with a nice graphical user interface that they can use to look at their data, but they don't perform any activities. We do the same for data management, which was also a great example, where everybody is basically doing the same piece of quality assurance from their Refinitiv feed, Bloomberg feed, whatever.
Yeah.
They were happy that we could kind of take over that task and run it for them.
And this has been that sort of increased trend, hasn't it, to manage services as a whole? Yeah.
But for us as a software company and a technology company, it's very important for us that we have the discipline to sub-select the areas where we can truly automate it by using our own technology. Because and it's a thin line, right? Because if you just take whatever you want, you end up being a large kind of BPO provider. Yeah. And that doesn't go particularly well in a software world where the valuations are somewhat different and the scalability has a different magnitude. So it's, I would say that's probably one of the bigger things that I spend my time on, to make sure that people understand the value of our underlying technology, both internally and externally. Yeah. And we carefully choose those areas. Investment accounting is kind of very straight ahead of us because we currently have more than 25 trillion euro going through our accounting capabilities every day in basically in jurisdictions across the world. So we know it's highly automated. So that was kind of a good starting point. The same with data management. So you kind of get this variation between software as a service and then a BPaaS, as we call it, a business process as a service, in those very distinct areas where there's high level automation. And that combination is quite interesting. And that's also kind of another variation over the other theme where I said that our customers go through quite structurally. What do I need? Where do I want to innovate? Where do I want to be different? Yeah. And where do I just want to standardize and do these things? And I think one answer is obviously SaaS. Second answer is BPaaS. And then the third answer is back to the platform ecosystem that I talked about. And just to answer your question there, what we actually did was, once we had the input from all the 300 customers, we actually did our own screening of the market. So we talked to, I think, actually more than 130 FinTech companies around the world, just saying, well, this is what we do. We kind of want to build an ecosystem that does this, and that. And then you start to build and suddenly navigate in that infrastructure. Yeah. And that has then resulted in us signing up more than 25 partnerships that are now integrated to the platform, and we work together. And most of those companies, they've gone through some really cool innovation, but in the end, there's a win-win situation because they can tap into our customer base and certainly get some scalability into what they do. And that's where kind of the eyeball, the front to back presence and the data source that we sit on become quite important.
I'm interested to hear what that sort of impact that has on procurement, because we all know that there's the sort of bottlenecks when you're dealing with some of the companies who you're selling to, with regards to innovative fintechs with great ideas not being able to get purchased because of the pure procurement processes which they're able to get through. I imagine there's a escalator that you guys can provide to improve that, but it's also there making sure the due diligence is in place from your side to make the right partnerships in that sort of world too. What sort of challenges has that brought up for you, and how are you overcoming them?
Yeah, but I think there's an interesting balance here, right? Because so what we would normally do is that we kind of split our partnerships into super tight partnerships where ultimately our customers can sign one contract and then they contract the partner through to what we do as well.
Yeah.
Most of the other ones are more an optionality play, so we kind of validate the partner, but the partner has to contract themselves with the customer. I think there is a risk discussion going on the customer side about how do our customers navigate through this? Are they willing to kind of put an emphasis on a particular platform with the risk associated that it doesn't exist down the road? And I think we're still navigating through that. But there's certainly some of them where we've done enough due diligence to kind of warrant that, but there's other ones where it's a work in progress. But it's also interesting because we can see from the market, and that's an interesting conversation to have overall, is that suddenly when people are contracting through us, the requirements goes up substantially because we are a big company in this world as compared to if they were acquiring through directly into the company. And that's obviously something the industry as a whole kind of need to figure out, because I think if we can kind of solve that together, I think there's a win-win for everybody.
Yeah, I guess that sort of collectiveness, that collective solution, solving is a big feature of everything we're looking at the moment. And one of the exciting parts, I think, of what you're doing is a business that's evolving and transforming at pace. In a time where traditionally it's not, it's not necessarily de rigueur for a business of your sort of size to go down that sort of route. And it's really encouraging to see that, to keep and maintain and grow that market position.
But it's creating a lot of excitement inside SimCorp as well, because you can learn a lot from these new companies as well, the way they think and what they do. So I think our ultimate dream here is that in the end the market would look at us as a platform that kind of enables a bigger ecosystem. I think certainly we have the technology to play that platform. Now we need to work through and making sure that our customers are also kind of seeing it that way.
It's a fascinating challenge. Speaking of the marketplace and looking forward, let's finish with a couple of things. Tell us what you think the market looks like. You've mentioned ESG. We've spoken about crypto to an extent, and various other things that are coming through. 2022. What's the market hold in store?
So we operate in all three parts of the world, right? It's fair to say that we kind of have two parts to it. We have kind of the full, relatively fundamental upgrade of the infrastructure, whether it's front to back, front to middle, or just back and accounting, doesn't really matter. It's typically relatively large transformational project, not necessarily because SimCorp takes a lot of time, but you need to change your work processes, you need to close down old systems and all of that. We believe there's still a lot of old systems out there that needs replacement, but it kind of runs its own mode, if you will. And we can also see now that somewhat COVID put a hold to some of these transformational discussions because there was other things to worry about. But we can certainly see now that Europe has been back to 6 months with a relatively high pace, but we can also see North America and APAC opening up. So that's good. That's kind of what we've been doing for a living for many years. But what we're quite excited about to see is that there's also some of the more nimble approaches to the market opportunity that we developed over the last 3 to 4 years that really now has traction. Whether it's kind of digitalization of the client communication, whether it's the data management we just talked about, whether it's outtasking, investment accounting, doesn't require you to change everything. So that's really going very fast across all three regions. And then I think in a somewhat interesting point of view, we're seeing quite a few opportunities now where we have white labeled our platform through some partnerships with large global custodians and asset services. And that's actually creating an extended addressable market for us, because with their entire packaging, with some of their financial services, they can actually tap into a lower part of the market than we would normally do direct. So overall, from a SimCorp point of view, that's quite exciting, because it extends
Definitely.
our reach.
It's wonderful to see, and really refreshing to see, you know, this sort of excitement, you know, happening at the moment. It's a great opportunity for the business to sort of really strive forward. It's been one of the great established names in buy-side tech for so long, and to see that sort of adoption of new technology and excitement about where it can go for it is a testament to everything you've been doing. So looking forward to seeing what the next 50 years has in store for all of you guys to go. Christian, for anyone who's watching this and wants to find out a little bit more about SimCorp and get in touch with you guys, what's the best way of doing that?
Well, there's obviously our webpage. You can find my name anywhere. And then we have quite a large team, pretty much in every financial city of the world. So don't be shy.
Don't be shy, get in touch. Wonderful speaking to you, Christian. Thanks so much for your time this morning. I really, really appreciate it, and glad to see the sun shining in Copenhagen, the traffic coming back, and long of the future. Good to speak to you. Thanks very much.
Thanks a lot, Toby. Take it easy.
Absolute pleasure. And thank you all for watching. We'll see you soon on another episode of FinTech Focus TV. Thanks for now.